Let me start with a very happy long weekend. Hello to all of my good trading friends out there. Doug here with Trade with Doug. Welcome to another weekly edition of Stock Market Mutterings, where my promise and guarantee has always been to take a grope in the murkiness, try to make some sense out of the stock market, and I hope whatever we discuss puts money in your pocket. As always, if you need help, visit tradewithdoug.com, click on the private community, or join our brand new all-free micro-cap crypto trading room, the Penny Pound. All the links that you need are down in the description box. So welcome to, again, a weekend edition of Market Mutterings. A very long weekend, a holiday weekend, or let's say it's supposed to be a holiday weekend, President's Day. Now, us Americans, we love our holidays. I mean, we hit it hard. But does anybody have any, traditional President's Day celebrations? I mean, do we really celebrate President's Day? Now, something else I want to share with you guys, because when you're with me, you always get a little bit of education mixed in with some entertainment. Did you know that the most bullish week of the year is the 4th of July week? Makes perfect sense, right? Patriotic, America, hell yeah, no way do we finish red. But do you know that the most bearish week, historically, is President's Day week? Now, first of all, what does that tell us about us Americans? We love our country, we're patriotic as hell, but we don't like our presidents, do we? Also, it shows you that this is a terrible week if you're bullish, because if we build on a bearish week this week, which we might do, it can get pretty ugly. Now, here's what I really want to discuss with you guys, especially the newer traders out there, or especially anybody that wanders astray. The reason that we look at charts are the purest form of honesty in such a dirty world of the market. It's the real truth. It tells you exactly what something is worth. I said this in the last couple of videos that I've done. All relevant information in the world is reflected in what's happening in the charts. If you're looking for truth, if you're looking for honesty, you'll find it in the charts. And here's what. We can point our fingers to the whole Russia-Ukraine situation. We can point our fingers to the Fed. But the truth is, price will tell us what the next steps are. Now, something I've been talking about in the last few weeks is that we have this area back in January where we talked about it in the market mutterings then, that the market would probably bounce. And it wasn't because we have a crystal ball or something. It was just, look, the bears were in control. They tried 5 trading sessions in a row to get this market underneath the 4,300. There were some trades under 4,300. There were some periods of time we poked our head below 4,300, but the bulls always came in towards the end of the session to save the day and keep it above 4,300 by all means necessary. That ultimately led to a pretty decent spike. Now we're seeing the reverse happen, because what happened on Friday and what happened during the shortened trading session today on the futures market, at least on the regular markets were closed, told the story. Friday here, our short-term support for the week was 43.50. So we had 2 numbers that were very important to our short-term levels, 43.50 being the nearest, and of course the 4,300, which bears a little bit more of importance because of what had happened, and it was a recent bounce from a correction and so on. But let's first talk about the 43.50. We lost that on Friday and got a close under it. Now, under the circumstances, I might be willing to not put so much pressure on technical signals, because we're going into a 3-day weekend with the Russia-Ukraine situation, whether it's legitimate to the markets or not. But really, it's a period of who wants to take risk. When you got to ask yourself that on a long weekend when a war could break out, who wants to be putting big money down on a Friday? Nobody. So there was no reason under any circumstance to open up positions long on Monday. It didn't make any sense unless you were just for sure you forecasted the worldly events. So today was kind of a telling day, even though it was a holiday. And man, I tell you what, we had a little spike after everything seemed okay and the world was still in one piece. But we sold off all of that. And at the close, we are now at 42.90. So we have closed underneath of that all-important 4,300. Now, I'd like to say, well, it was a holiday. Maybe we see a different tone. But guys, I'm not so sure that's the truth here. I think we're going to see some lower prices. Now, here's what's going to happen probably. The market's never that easy. There's going to be a lot of people that want to pile in short early on Tuesday. Are probably going to get creamed or cheesed, as we say, right? Don't discount the power of what a bounce could be from here. 1 day, 3 days, 4 days. We never really know that. The thing I said about President's Day, that doesn't have to abide by any rule or standard. That's just some historical nonsense that means nothing to our future development as traders. So don't discount how big one can be. On the flip side, don't be a fool right now to buy into that rally. This old market of V-shaped rallies back to all-time highs, dips are always great buys, is not the case right now. Now, for sure, I believe that in the future we will make all-time highs. Maybe it's not this year, the next year, I don't know. But the market will eventually go up. We will eventually come out of whatever hole we are in, and we will survive as a species and a market. It's always done that through pandemics, through wars, through depressions, and everything else in between, and crises. It always comes back. What I'm saying is, if you're an investor, don't worry about it. But traders, there's going to be better opportunities to buy some of your favorite names. I know you're looking across the board and you're saying, man, this is cheap, this is cheap, this is cheap. No, it's not. It's going to be cheaper probably before the week ends. But let the price action dictate to us. I mentioned a lot of this last week, and now we're underneath those levels, so we need to be concerned about how the activity starts at this week. Now, I want to give you a couple of different stocks here. By the way, I just showed you the ES here. If I take a quick look at the NASDAQ, let me switch this thing over here. Same thing. I know I didn't talk about it here real quick. It's already at those here. So you're going to open up Tuesday at some pretty pivotal areas. So govern yourselves accordingly, I should say. Now, I want to talk about a couple of names here. No specific trades on them. I just want to give you an outline of what I'm looking at, and then you can go from there. I'm kind of interested in this VERT because VERT has gone VERT. Look at this chart, man. I don't know what it's on, but I want some of it. Big move here from 28 straight to 35. This is a really, really strong parabolic and vertical move. Now, chart-wise, we've already reached a fatigue zone. But with all things considering what was going on in the market, we haven't really seen a good breakdown. Although I like where it is now, and I'm leaning to the short side with this after this parabolic run, it's still pretty consolidated up here. So you need two things when you're looking for a trade. You're looking for a base or a level or some sort of area where you have a defense if you're long or you have rejection if you're short. Pinpointing those levels lets us know what can happen next. But that's not enough. We need another sign or a setup, right? This is where the setup comes in, where we get a candlestick or a wick or something that tells us this is what should happen next. So we've got the fatigue zone, and you could make the argument to short it at 35 here with a stop at 36, makes good risk sense. But we haven't seen enough to the downside that this is ready to roll over. It could go either way. It could just turn into a flag and break out. We don't know that yet. I'd like to see a little more fade here. Maybe a little pullback like that to short, just a little more rejection in here. I just want to watch it to see. Maybe it breaks out. If it does, I'm not really interested in longing it right now. But for this one, that's what I'm looking at. This CELZ, C-E-L-Z, Creative Medical Technologies. That's an interesting name. Like, I get you really long-term, a company called Creative Medical Technology Holdings. Just sounds iffy. Anyway, obviously this is, how do you want to say it? Penny stock crap. Here you've had some verts, you've had some pullbacks, some verts and some pullbacks. Vert, pullback. I want to short this thing. I think it ends up back to 150. It's already pulled back pretty good from 226 if you guys are into this stuff. I don't think the setup is there right now. Would like a little bit of a bounce over 2 again, followed by some fatigue to get short. If it just dumps down into 150, don't chase it, because I don't think you have any more of a floor right now than 140. So you're very close to that floor. May not be justifiable risk versus reward. Actually, a better scenario would be a run to 275 or 3, but this chart needs a lot of work. For right now, it's just a watcher for me. Something like VERT is BCRX. I've been watching this for a while. I think I've mentioned it before. Same theory here, was thinking about a short. This one's going to be different because we have some earnings coming up here on the 23rd. I'm interested to see how the earnings work. You're either going to get a really nice earnings and this thing's going to gap up. And even if it did at this point, I think I'd still consider shorting this thing after a couple of days. I wouldn't do it on earnings day probably, but I'd want to watch it closely. But there's always a chance going into earnings something this strong just bombs out like a Netflix or a Facebook and just eats it all the way down to 14. The only trade I have is if there is stale earnings and an early fade off of those. If it gaps up, I might look to that short, but it would probably be 2 to 3 days after earnings or much later in this week. If it flushed and it was under 17 or 16, I wouldn't touch it. Wouldn't touch it long, wouldn't go short. That would already be too far down for me. This one also needs some work. Most of the stocks that I'm looking at really need some work, because if you're just going to sit here and short something, just keep shorting PayPal, keep shorting Zoom Video, keep shorting Roku, just keep shorting this crap, because it's not stopping yet. But here's a few that I do like. And I think the last one, oh yeah. Snap. This looks like a really good short right here. Short 38, stops 41, target 30 to 25. When I saw this chart, I was confused as to what is Snap even doing up? Does anybody even use Snapchat anymore? If you do, Snapchat me. I don't even have a Snapchat. Just Snap. Does anybody use this? And why would this rally in the midst of all that? I just don't get it. But again, let price action be your guide. It wouldn't matter what it was, if it was Apple, Amazon, Snap, or Digley. You guys remember that stock, DGLY? That's a good looking short setup. Nice rounding top off the whole number after an earnings rip. Into resistance, nice rejection. You got a definitive area where you can short this with a stop. Any bounce on Monday has my interest. Well, it's already Monday. What am I talking about? Any bounce on Tuesday has my interest for a short. So let's do a review here real quick, guys. Some of this stuff I breezed through. My apologies. It's more to me about the market right now. I'm trading more of the markets right now. I'm watching them closely because we're at some vital zones. If that 4,300 stays there and sticks and continues to build lower, you better not be long in stuff. You're going to be asking for short-term pain. If you've got deep pockets, long-term horizons, don't listen to what I'm saying. But if you're trying to get good prices, do not discount how far this market can go. We've only experienced about an 8 to 10% correction. We can easily do 20. We can easily do 30 and erase all of last year's gains. What happened in the market in the past does not have to happen again in the future, especially when a Fed-induced and generated rally is now over by them pulling QE and raising interest rates. And until investors get a better viewpoint of what that is and the extent of what these rate increases may be and the extent of the aggressive pullback of QE, this market's going to have uncertainty. And with uncertainty, nobody's going to want to put any money to work. Simply put. So don't discount how far it can go. Also, don't discount how far panic bounces can get. People can get pretty dumb at times and buy some silly shit. So keep that in mind. Stocks, VERT, CELZ, BCRX, Snap. I'm interested in all of these shorts, mainly because there are two of those, BCRX and VERT, which are already up but haven't cracked yet with the market, seeing if maybe there's a delayed reaction if the market dumps. Maybe I can get those short. Snap is just a short, period. And cells, a lot of things need to happen for that one, CELZ, but we'll give it a shot. We'll keep it on the list. We'll give it its just due. You never know. As always, guys, I want to thank you very much for watching this video. Find me if you need help trading through this. Visit us in the free penny pound, Sylvia Bellrock and I. Make sure you show up to all of the Q&A sessions that we have here at live on YouTube. All the details are down in the description box. Trade well, guys. Take care. I shall see you soon.